Uh, Morning, folks. Thanks for hanging in there. It's been a long morning, but hopefully for all of you an interesting and informative one as well as it has been certainly for me. Welcome. I'm glad you're here at our press conference, and hopefully you were here for the full morning. My name is Mindy Luber. I'm not going to reintroduce myself. You heard me say it this morning. But more importantly, I'm joined by Christiana Figueres, by Michael Liebreich, by Comptroller DiNapoli, and by Philippe Defosses. I'll talk a little bit about them as I introduce each of them. I want to quickly summarize what we want to talk about, and then we're going to go to our experts. We heard throughout the morning from every speaker that climate change is upon us, it is accelerating, and it is profoundly disrupting our global economy. Second, we heard that we are uniquely positioned today in the wake of last month's historic Paris Climate Agreement to do something to avert this colossal global threat. That's particularly the case with investors who could have an enormous role in hastening far more quickly our transition to a low-carbon economy. With that in mind, we're hoping every investor leaves with the following 5 commandments, so to speak. 1, set ambitious clean energy investment commitments and support rapid creation of high-quality clean energy investment products so that we could double the amount of money invested in clean energy by 2020. We heard that we are at $330 billion this year invested in clean energy. If we could double that by 2020 and reach what we call at Series the Clean Trillion, somewhere between 2025 and 2030, I think we will be on a good path. 2, we have to establish clear goals for reducing carbon risk exposure in portfolios. Investors need to look at what's in their portfolios, how to examine that climate risk. Engage with companies in their portfolios who are not acting responsibly and urge them to change their practices. And if that's not the case, consider how to change their portfolios. 3, call on financial regulators worldwide to implement climate risk disclosure requirements and call on the SEC here in the United States to enforce the climate disclosure requirements already in place. The 4th commandment, so to speak, or urge that we have for investors and everybody in the room is work with your governments worldwide to implement the Paris Climate Agreement and meet or exceed its ambition. And finally, to advocate for stable, economically meaningful carbon pricing and an end to fossil fuel subsidies. If all investors could take these steps, we can collectively achieve a seismic shift in the global economy. Without question, we heard this morning, now is the time to act. The wind is at our back. We've got some very clear signals from Paris and what it takes to get to a 2-degree world, but the game is just starting. Much to do to follow up on the extraordinary work. And the extraordinary work done by Christiana Figueres, the Executive Secretary of the UNFCCC, who led the climate negotiations in Paris, who took us places we thought were impossible, got results that nobody believed would be remotely like what they were, and made a huge difference. So let me bring Christiana up here and let her speak to the success of Paris and where we go from here.
Thank you very much, Mindy. Very sweet, very generous of you. Good afternoon to all of you. First, let me say we're living in a completely different world, even just 2 years ago, because Mindy and the UN Foundation have been hosting this very important thinking session and planning session every 2 years now. What number is this? Number what? 7. Number 7. But just where we were 2 years ago and where we are today, a completely different world. For many different reasons, certainly because the solutions to climate change are much more at hand and much more cost competitive, but also because of the awakening in the financial sector. And from that perspective, which is the one that brings us here under this roof today, let me just say I believe that the Paris Agreement has basically removed 2 question marks. Question number 1, is it truly a risk to not address climate change in a timely fashion? Question mark removed. Absolutely. The understanding of the risk, both to national economies as well as to the global economy, the macro economy, are now understood in ways that were not understood before. And we're certainly helped there by increasing disclosure, by increasing work from the banking industry and the finance industry that is really time over and time again understanding the huge risk that we would incur should we not address climate change. So that is question mark number one removed. The other question mark that has been removed by the Paris Agreement is, are there opportunities here? Because the financial community doesn't go out there, I'm sorry to say, because many of us would want every single industry to, quote unquote, save the world or save the planet or save humans, but that's not the way it works. And this is not going to, the capital is not going to be shifted unless there is serious business opportunity here. So to the question, is there opportunity? Incontrovertibly, yes. And more of that is being discovered and is being unearthed as we see the energy sector completely starting to a complete transformation, as we see metals and mining, and I'm going to rattle off all of the sectors that I was just meeting with in Davos, because it really is quite amazing. This is not just about energy, as we were just speaking. It's not just about electricity. It's about all of the attendant sectors that are going to support this transformation. So whether it's metals and mining, whether it's chemicals, whether it's the car industry, whether it's the aviation industry, whether it's the very same oil and gas industry, no matter which industry you're talking to, it is now very, very clear that there are more and more opportunities to do good and to do well and to have a just transition that brings welfare for everyone. So a very exciting moment. And were I to bring this all into one sentence from the financial sector point of view, what I think is remarkable is the shift that I have seen in the understanding of what fiduciary responsibility is. We have shifted from fiduciary with a small f to fiduciary with a large F, with a capital F, understanding that it is not about a quarterly result. It is about the long-term stability of the economy and of industry as a whole. For that, I am truly grateful, Mindy, for the work that you have done and everyone else here on the panel to contribute to what could be seen as very simple, but it has been quite a rocky road and a huge transformation to understand fiduciary responsibility in its full context. Thanks.
Thank you. I'm going to introduce our other speakers, and we will take questions at the end. Michael Liebreich, I invite you to go up to the podium. We will have musical chairs. It might have been easier for me to stay up there, but I want to give our speakers the opportunity. Michael Liebreich, as you know, is the chair of the advisory board of Bloomberg New Energy Finance. Almost every person that in the room today quoted Michael Liebreich one way or another, or at least the statistics that he's created. It's always best to get those statistics from the person who came up with them in the first place. So a very smart guy, Michael Liebreich.
Thank you very much. Good afternoon, everybody. In fact, I just quote the statistics that are produced by my team. I have a large team that assembles deal by deal and dollar by dollar. And so let's just talk for a second about that 330 billion figure. First of all, what's in it? That's renewable energy, energy efficiency. There's power storage. There's not a lot going on in carbon capture and storage, but it's kind of everything that moves the electricity system forwards towards a cleaner energy, a cleaner future. It doesn't include nuclear. It doesn't include natural gas, but that's what it is. And if you go back 15 months or so, when the oil price started to crash, I was authoritatively told by many commentators, all of them very erudite, none of whom had forecast the crash in oil prices, that this would put a stop to investment in renewable energy. All these things are complicated. Renewable energy competes with natural gas and coal and nuclear, not really with oil as it happens. But nevertheless, gas prices, natural gas have also come down. The fact that there's a new record in investment in 2015, despite all of that, the fact that there's a new record despite the lowering of costs of clean energy technology, which means that every project you do becomes cheaper. The fact that there's a new record in dollars despite the strong dollar. The fact that there's a new record overall despite the continued weakness of the European economies, and the fact that Europe and investment levels, even in a country like Germany, are actually down from their peak. And Spain had a boom-bust cycle and there's almost no investment, same in Italy and so on. And the fact that the sector is in record territory nevertheless is actually a stunning riposte to those who thought that it was going to stall. There's also an interesting figure, which is 380 billion. If you add large-scale hydro to the 330 billion headline figure, you get to 380 billion of investments in 2015 in the sort of slightly expanded definition of clean energy. And 380 billion, just coincidentally, is the number of oil and gas projects that were cancelled during the year because of their poor economics in the new price environment. That was a figure produced by an oil analyst, not our own. That's a Wood Mac figure. But 380 plays 380 is sort of an interesting symmetry. Now, going forwards, there's plenty of, if you want to be scared about 2016 in the general economy, there's plenty of reasons to be scared. I don't need to list them. For the clean energy sector, sustained low oil and gas prices are concerning, there's no question. But nevertheless, the policy environment, the supply chain, the cost base, and then the tailwind, against all the headwinds, the tailwind that comes out of Paris gives us the confidence that we are most likely going to be, again, in new record territory for clean energy investment in 2016. What does that look like then if you go slightly longer term? So we have just, with Ceres, published a report today called Mapping the Gap. And I feel a little bit like, I don't know, was it the ghost at the wedding or the grown-up at the teenage party, whatever? I'm not quite sure what the right analogy is, because the problem with Paris, as it stands, is you add up all the INDCs, and as we all know, they don't add up to the carbon budget for a 2 degrees centigrade world. Below, well below, I believe. We're going well below. We haven't looked at well. In fact, Mindy, next year we may need to do mapping the even bigger gap if you want to go to 1.5 degrees. But meanwhile, we've done mapping the gap, and the gap is what we've done is we've looked at how much investment in the spaces that we cover, how much investment would there be based on, in a sense, business as usual, which, by the way, now is includes the INDCs. And we're looking at within the electricity system and coming up with a figure of somewhere around $7 trillion between now and 2050. And the exact numbers, please, are in the report and in my presentation earlier. But if you want to go to 2 degrees, you have to do more, and that's the gap. That's another $5 trillion. And it's easy to get desensitized to anything starting with a trillion. But, you know, we're here with the investors, and you're going to hear from, you know, Tom DiNapoli, and we're going to hear a bit more about that. But here in the room, there are enough trillions out there to cover that gap, which is very good news. But there is a further gap if you want to get to 2 degrees and even more beyond that. And that's, you know, that data and that report is there for you to download. So there's more work to be done. Thank you very much.
Great. Thank you, Michael. I'm now going to introduce Comptroller DiNapoli. We've had a lot of conversations about investors, many of us not investors, telling them what to do, what should be done, when should it be done, how to do it. And we do have to step back with some humility and look at the fact that there are people who are really responsible for doing it. Comptroller DiNapoli is the controller of the state of New York. I believe the second largest public pension fund in the country. I'm honored to have him as a board member of Ceres. But as an investor, he is wisely taking steps in the right direction at a pace he believes is appropriate. But he's one of those people we're talking about, the real investors who are doing the real things, and he's doing just that. Thank you.
Thank you, Mindy, for that very kind introduction. We're actually number 3, but we're trying to be number 2, so I'll take that as a good incentive. It really is a privilege for me to participate along with my team once again at this Investor Summit. It really has been a phenomenal half day so far, and we're well into the afternoon. I really want to thank the UN Foundation, certainly Ceres, Mindy Luber for her team for her incredible leadership and their great guidance in organizing this very important event. I think to have the address this morning by our Secretary General here at the UN underscores the importance of this gathering. certainly to be in the presence of the heroine from Paris, Christiana Figueres. Always an honor and a privilege. We're going to bottle up her enthusiasm for this agenda and get it out there to everyone. And to be joined on this panel by Michael and Philippe. It's really a privilege for me to be here. As Mindy said, I come with the hat of being an investor, and I think gatherings like this are very important for the investment community to become even more committed to carry forward the commitments that were made in Paris, the cooperation that certainly I got to see firsthand in the brief time that I was there in Paris. I am trustee of the New York Common Retirement Fund, third largest public pension fund in the country. Depending on the week these days or the day, we're between $170 and $180 billion. I think we're up again today, or at least I hope we are. We have sizable investments all across asset classes that certainly have opportunities for us to be part of this agenda to build a lower carbon economy, and we are committed to that. We are committed to that in terms of not only where we put our money, but using our voice as an investor. Certainly trying to move the companies that we invest with to understand the importance of recognizing the challenge of climate change. Our focus is certainly the energy sector, but it's not limited to that sector when we talk about our investments and our engagement with our corporate partners. We've increased our efforts this shareholder season. We've called on companies that we're invested in to disclose their emissions and to address how they are going to mitigate the risks that climate change presents to their reserves, their infrastructure, and ultimately their bottom line. Among the shareholder proposals that we are involved with right now, we've asked Exxon to publicly explain how it's going to prepare for a future with lower carbon emissions and meet the changes brought about by the Paris commitment to holding back the rise in global temperatures to less than 2. As investors address those risks of climate change, it's important not to forget that the transformation to a lower carbon economy presents us with many exciting opportunities. That's why with the New York Fund, we've committed $5 billion towards sustainable investments. One of the foundations to this commitment is a low-emission index that we recently announced. We moved $2 billion of our public equities to this index. We announced it as part of my visit to Paris, and I'm very pleased that as of a week ago, all $2 billion was moved over to this new index. The index excludes or reduces our holdings in the worst emitters, shifts investments towards companies with lower emissions of greenhouse gases. And by doing it through an index fund, it's very efficient for us from a cost perspective, and it has a very close tracking error to the Russell 1000 index, so it certainly meets our investment goals for the long term. We believe that using this kind of approach to incentivize the better performers is going to encourage more companies to change. It also helps us to track the worst performers in our portfolio. Then we can step up our engagement activities in terms of corporate governance to hold those worst performers to a greater level of accountability and perhaps ultimately make some different decisions about where we're going to put our money. Certainly, given all of the enthusiasm and commitment that has come out of the Paris Agreement, I was very pleased that our strategy on this new index fund has received a lot of interest, certainly here in the U.S. and even when we announced it in Paris, and we hope it will be a model for other public pension funds to follow. The Paris talks resulted in an unprecedented global commitment to address global warming. We all must do our part. Investors have a major role to play in making a good outcome happen. This summit is an important opportunity to really be a call to action for all of us to seize upon and recognize the opportunities that a cleaner economy offers to all of us. It is certainly the right thing to do. It is the smart thing to do. And our interest is in protecting the retirement security of the over 1 million men and women who depend on the strength and the sustainability of our pension fund. And dealing with this issue right now is the smart strategy for us to accomplish that goal. Thank you.
Thank you. And speaking of Paris, or at least the French, Philippe, if I could ask you to come up here to the microphone. Philippe Defosses, who is the CEO of a French pension fund, ERAFP. You're going to tell me how to pronounce it correctly.
ERAFP.
ERAFP.
That's okay. Perfect.
But from a European's perspective and French pension fund perspective,
Sure.
tell us how you're moving forward.
Sure. The first thing I want to make is to thank you, Christiana and Mindy, for this fantastic contribution you made to COP21 success, and also for the success of this event today. And I would rebound on what President Al Gore just said a few minutes ago. Should we change? Can we change? Will we change? I think there is no option, there is no choice. We have to change because, as Christiana is used to say, there is no planet B. We just have one planet. I would like to start by reminding every one of us that the last time we had the same temperature on this planet, it was 600,000 years ago. And we were just starting to walk on two legs. So, I think we should not forget that 2 degrees is already quite a huge bet. And unfortunately, Christiana is very right to a point that 1.5 should be our new goal. Because when we are assuming that 2 degrees is manageable, actually we don't know. We don't know because we are also assuming that the consequences of 2 degrees would be twice the consequences of 1 degree. Well, I would not bet the ranch on that. So, we have to maintain the momentum of Paris. It was a success, that's true, but everything is starting now. So as the CEO of the biggest pension fund in France, I consider it is my fiduciary duty to measure my fund's exposure to climate risk. It is the reason why we were among the first institutional investors to make public the carbon footprint of our investment. And now, in the second stage, we are starting to decarbonize our portfolio. If I had a recommendation to make, it would be twofold. The first is to encourage mandatory communication by investors and asset managers of their exposure to climate risk. We should not even have to vote laws for that, because it's part of our fiduciary duty. At least I consider it's part of our fiduciary duty. If you are managing money for young contributors, in every investment decision you take, you should consider whether that investment is resilient or not to climate change. And the second thing, the second recommendation would be to ask institutional investors to actively contribute to the work in progress to standardize data and promote integrated reporting. Because we have many, many data, but data is not information, information is not knowledge, knowledge is not understanding. But we have to start by making possible the comparison between data that we are getting from everywhere. It's where the last initiative that was launched a few days ago, a few weeks ago, is so important. At last, I think it's very important that institutional investors speak louder, clear and loud. They own the trillions. And Christiana is also used to say that we have to shift from billions to trillions. We are the universal owners. We pension funds, institutional investors. And this is what we did when we joined IIGCC, which stands for Institutional Investors Group on Climate Change, the sister organization of Figueres. It's for Europe. We are 120 members, mostly pension funds. Some asset managers joined lately. We are responsible for the management of 12,000 billion euros. So just if we were able to tilt our asset allocation, you can realize how big would be the impact. And just to give you a European perspective on also the feeling of a medium-sized pension fund, we are managing 25 billion euros. If we want to have some clue, some leverage on the European Commission, we have to unite. If if I tried, to meet European Commissioner just by saying, this is Philippe DeFosses, CEO of ERAFP, I would not even go through the assistant. When we are going with IGCC members, we are meeting directly with commissioners, and they listen to us when we say, we want a price on carbon. We want you to fix the ETS. So, main message, let's get together and make very loud and clear that we want to be part of that change. Thank you.
Great, thank you. Great, we'll take a few questions. Why don't we start in the front? Go ahead, yep.
From Xinhua News Agency. First, I want to begin by saying a big congratulations on the Paris Agreement. I just have two questions. One is the objective is to reach a clean trillion in investment in clean energy, and I just would like if maybe you could expand a little bit on what China's role will be in reaching that. And then on the other side of the equation, we have the cost of climate change, and in calculating that, this year we're seeing an extreme El Nino weather event, and I'm just wondering if the risk if the risk assessors, it must be a big question for them whether El Nino is how it is related to climate change. So if you could also expand on that as well. Thank you.
So maybe Michael, you want to start on China?
I can speak to China. So within the 330, China is 110 billion. And I described them in my remarks earlier as the rock star of clean energy investment, because they really are now top nation by a pretty substantial margin. And the second one is US with, I think it's 57 billion or something like that. If you go back in your chart, there were various periods when they started investing in clean energy. A lot of it was to do with building a supply chain, particularly in solar. So Germany was subsidizing solar and the Chinese were making the panels. And it looked very much like an attempt just to build another export market. So the jobs were interesting, the exports, so flat screen TVs, solar panels, whatever. But I think very quickly around 2007 it became clear that it was much more than that, that it is actually also designed to change their energy mix. And they're motivated by the same things as you'd expect, same things as any other nation, concern about climate change, very low-lying coastal areas, but also particularly, and growing demand for energy, of course, in the case of China, but particularly also the air quality in the cities. And that's largely caused by the coal-fired power stations. Those have to be either shut down, moved away, enormous investment required, and clean energy is seen as a contributory, mainstream contributory solution to that. And hence we've seen this tremendous surge in investment. China's economy obviously is in the news right now. If I look at the numbers, I'm supposed to believe that it's still growing at 6.9% per year, whilst its energy growth is only growing at 0.5%, its electricity growth. And I just say I can't see that, as an energy analyst, I can't see how that can work. And there's lots of concerns, but there's also plenty of fiscal monetary firepower in China, and of all the industries that they're going to spend that on, clean energy is going to be right up there. And you can read the last 5-year plan, that makes it clear, and the next 5-year plan will make it even clearer, I'm sure. So I can't put numbers on it, but at the moment, 1/3 of the investment is in China. That's probably, in a sense, overweight, given that Europe needs to be doing more. Europe is in the doldrums in investment. But should it be 1/4 of the trillion? Should it be 30% of the trillion? It's that order of magnitude, and I think it will be.
Great, Philippe.
Yeah, maybe on the shifting the trillion issues. I think we should not look at the cork instead of the tree. I'm not saying that it's not important to invest in green bonds or projects, but it's in every investment decision we take that we should take into account that does it make sense? So it's a global approach that we have to implement. And by the way, when you are big pension funds managing tens of billions or hundreds of billions dollars, you are a universal owner. So at some point, you have to raise the bar for every investment you are making. And for ERAFP, for example, we choose from the very beginning to apply our own SRI grid, but with a no-nonsense, very pragmatic approach, meaning that it's a best-in-class approach. We don't exclude any sector a priori. But in each sector, we are ranking the companies according to the way they are, taking into account social issues, governance, which is very important, and environment. And at the end of this process, the bottom quartile is excluded. So, if you do that in every asset class for every investment decision, it's not spectacular. That's not the ebbs and flows. That's the undercurrent. And many, many institutional investors are shifting, sometimes not even saying it publicly, but they are shifting towards that kind of, integration. And it makes sense. I'm not saying we should not invest in projects, but it should be complementary.
Right, we're going to go to
Sure.
this gentleman.
Thanks a lot.
The woman in the third row.
Okay, great. Matthew Lee, Inner City Press, on behalf of the Free UN Coalition for Access. Thanks a lot for this briefing, for the event. I wanted to ask about banks' financing of coal. There seems like a number of groups were raising it during Paris. There's a few that have made loud announcements, but do you think that the actual financing of both mines and still yet to be clean coal plants is an ongoing problem? And also just supply chain. It seems like a lot of companies have made major announcements about their own emissions or consideration, but do you think, what's the next step in terms of the companies that are actually supplying them and getting them to make full disclosure? Thanks.
Anyone want to take that?
Sure. I wish I could say it's a slam dunk, but it's not. It's very much of a checkered situation right now. The situation with coal, I think, is pretty clear in the United States with the rise of gas, in particular shale gas, at least until a little while ago. That is not the clarity of the downward trajectory of coal in the United States is not as clear in other countries and not as clear in other producing countries as in some consuming countries. And it is, however, as we know, the most carbon-intensive fuel and hence the most responsible or the highest emitting. There is no doubt that coal is going to have to quite quickly leave the energy systems of the world. There just is no more space for unabated coal. I think that the challenge that coal has is, would we be able to bring CCS, carbon capture, perhaps use and storage, on board quickly enough almost to rescue coal onto the market? And everything seems to indicate that that is not going to be as quickly as we had expected. That is not to say that it doesn't represent a huge challenge, in particular from some developing countries who are currently still very much depending, in particular those who have to import coal, very much depending on that, and where this new kind of investment that we're hearing here actually needs to be scaled up ASAP, because there is no doubt that developing countries are on the up and up in their demand for energy. Both their populations are growing, the middle class is growing, and those that are under the poverty line also need very, very quickly to have energy. So the supply of energy is unquestioned. What does require our attention is how quickly can we provide them with alternatives to fossil fuels that are both technically competitive, but from this perspective, financially competitive, so that we can deploy them to the extent that they need to be.
Great. Go ahead.
Thank you, and I repeat the thank you for the briefing and congratulations to Executive Secretary Figueres. Pamela Falk from CBS News. My question, a very narrow one to the Comptroller and to Philippe on big pension funds. Do you think you'll get from the 330 to the clean trillion, and the Secretary General said that means doubling investments pretty soon? And then to Mr. Liebreich and the Executive Secretary, big picture question. Former Mayor Bloomberg said Americans don't believe in science, and yet at Le Bourget you could see the turnaround. What do you attribute to what do you attribute the change in enthusiasm around the world? I mean, it's sort of a big picture, and maybe you just did it with your own clean energy. But how did it turn around so much? Is it bottom up? Is it that people are telling politicians they want clean air? How do you explain it?
Why don't we start it with Comptroller DiNapoli?
Sure. From a New York perspective, we started a few years ago with what we called our Green Strategic Investment Fund for green and sustainable investments. Our target was $500 million. We found opportunities, so before you know it, we were at $1.5 billion. Now with the announcement of the index at $2 billion, we couple that with a doubling of the sustainable investments, another $1.5 billion. That's how we get the $5 billion. So we've certainly been scaling up our investments in this area. New York on its own obviously can't close that big gap that you mentioned, but we want to be a part of closing that gap. What I like about our index strategy is it's easily scalable, and we look forward to down the road putting more billions into that index fund. And I think as part of the response to what came out of Paris, I think you're right to describe the renewed commitment and the energy and enthusiasm. There are more opportunities now that are coming to us. So I think investors have put out the word that we're looking to put more money into these kinds of opportunities. So the opportunities are now coming to us. It's not as hard for us to find them. So we're doing our due diligence, and the more we get out the door, the more we're going to scale up, both in terms of investments across all asset classes, and certainly more with our index fund as well. So I'm optimistic that we're going to be, and U.S. pension funds generally are going to be a big part of closing that gap.
Just a quick comment about how we can contribute to reaching the goal of 2 degrees on hopefully 1.5. When we started measuring our carbon footprint 2 years ago, we were able to assess the reduction in carbon intensity of our portfolio to 12%. 12% is quite significant already compared to the benchmark. When you are investing in a benchmark on an agnostic basis, you don't take into account carbon risk. And just by implementing this no-nonsense SRI grid, you are able to reduce the carbon intensity. The question is how you reconcile those reductions at the individual level by every pension funds to the common result, which would be more a top-down approach. That's an open question, quite a difficult one. But if we were, all pension funds starting, to reduce the carbon intensity of our portfolio, year by year, we could see the impact on whether we are on track or not to reach the 1.5. Second question about the enthusiasm. There are not so many things we are really sure, especially now on this planet, but I'm quite sure I won't still be roaming around in 50 years. I guess my 6 kids will be there. And for them, it's really an issue. When we are talking about, time horizon, does not mean anything, because for myself and for my younger daughter, does not mean the same thing. So I think young people, the millennials we were referring, they have a very different look at the world as it is. For example, this undercurrent of shifting from owning things to use things. Let's consider the price of parking a car in Paris. It's 200 euros a month. Among my staff, I don't know one of them owning a car in Paris. They are using Uber, Autolib, whatever. So, this is a huge trend. And the most enlightened CEO are starting to realize that they have to adapt, to alter their business model in order to take into account the functionality economy. Schneider, Michelin, they are selling mobility, trying to get away from just selling tires. That's a huge, huge trend.
Great. Let's take one more question, sir.
Oh, yeah. Thanks. Question for Michael. You mentioned nuclear briefly earlier and how that wasn't included. I wonder if you could, we've been sort of hearing these calls from scientists like James Hansen and others that nuclear is going to have to be a part of the solution to these 2 degrees. I wonder, do you agree with that? I mean, well, I guess what's the rationale for leaving it out of your calculation? And do you think that nuclear could be part of that gap that you were talking about?
So I actually started my academic career. I'm not really an academic, but I studied nuclear, and I think that nuclear is part of the solution. It's not included in those figures because those figures were just, that was the definition that was used for the specific, in a sense, question asked. I do think nuclear is part of the answer. I think that it's very, what we're seeing at the moment, though, is that new nuclear is incredibly expensive. You know, James Hansen can say we should just be doing nuclear. Well, he should come and live in Britain and pay £92, $140 per megawatt hour, guaranteed with inflation increases for 35 years, with a guarantee for the debt, with the guarantees for the Chinese to bring money, with the guarantee of the supply chain to provide fuel, with the guarantee against any accidents, with the guarantee against disposal of the waste. Right? That's sadly the reality of new nuclear now. I think that when you look at existing nuclear, I personally believe it's verging on economic self-harm to be prematurely shutting down nuclear power stations, as is happening in certain countries, particularly in Europe. If they're there, they're producing low-carbon, marginal price, cheap electricity, and those countries that prioritize shutting that for what are essentially emotional reasons over dealing with their coal use and the climate challenge seems to me to be a very bizarre and it's a sad state of affairs, frankly. I think going forwards, though, for nuclear really to pull its weight, the industry needs to go back to basics. The industry and its regulators, it needs to go back to basics in its technologies. If you look at what happened to the US space program, it essentially became so unwieldy that it couldn't produce a new platform after the shuttle. And suddenly entrepreneurs like Elon Musk and others are able to do that. Now, why? What happened in order to enable a major, heavily regulated industry suddenly to innovate and produce new and much, much cheaper solutions? It's something like that. You know, it's not the question of whether it's thorium technology or anything else. It's a question of how that industry is structured and regulated. Given that CCS has sort of fallen out of the mix, and I would agree with Christiana that that's really not looking like it's going to be there in any useful time frame and scale. We really do need nuclear, but finally, it's not either or. It's just not that, you know, it becomes this terrible discussion. Oh, I think nuclear. Well, you must be this sort of person, and everything's tribal, and it's about what does it say about your politics if you like nuclear, and what does it say? Nonsense. We pretty much need all of the above to move at the sorts of speed that are required.
Thank you.
Yeah, maybe a quick comment from a European perspective, because you know in Europe there are many manual things that they are dealing with in Brussels, like how many liters you should use when you flush. But a common European policy on energy is something we have been working on for years. And when our German friends decide, because there are elections in the Baden-Württemberg, to get rid of nuclear in just one night, what is the impact? Then after, they are buying nuclear power electricity from France, they are importing coal. So I mean, at least for Europe, this is something that you should pay more attention to. You know, can you decide all by yourself? That might be the case for the States, but unfortunately, that's not the case for Europe. So, you know, once again, if we were united, I mean, you know, institutional investors, that's precisely the kind of message we could deliver. And believe me, this is the kind of message with IGCC we are delivering every time we are meeting with them. Not necessarily to avail significant results so far, but it's work in progress.
Great. We're going to have to break just very quickly if any of my colleagues would like a closing statement.
Well, I actually just wanted to get quickly back to the CBS question about what made the big difference in Paris, and many things made a big difference, but I think for me the most fundamental was the switch where every single country realized that this is in their own enlightened self-interest. That to me was the absolutely, you know, that's where we got the tsunami, if you will, the positive tsunami of 188 national climate change plans that came from 188 countries, where none of them put anything in those plans that is against their interest. Obviously they didn't. They put everything in there that is both beneficial for them from a national perspective, no matter what the sector is, whether it's industry, transportation, land use management, energy, whatever the sector is that they chose, and is at the same time a contribution to the global effort. But that switch of being able to understand that it truly is in our own interest, and then to be able to go beyond the national interest to come to a global agreement with a global goal long term, I think was the magical formula for Paris.
Great. Any other final comments? Terrific. We're going to break. Thank you very much.